All right, hello everyone. So let's do another case study. Now this is Bitcoin, right? So the more case studies we do, right, the better we're going to understand everything. So as you know, we had swing days, trade days coming from last week. So what I just want to do is follow that from the lows of the channel to the upside. So if technically the day for us time-wise as a trade day is okay, if the price is right, great, and the trading hour is what we're looking for. So if we have a combo or if we have a follow-up with that combo, then we should have a good trade. So here we are. Let me just reset this. This is Bitcoin. It's a 15-minute chart. Now, as you can see, Monday opened really nice. This is from last week. We can get rid of it because the market came down. Trading hours went up. No big deal. That was Friday. As you can see, I don't have Saturday and Sunday here, but it doesn't matter. On whatever you're trading, you can use the same kind of strategy. Now, look, we know the future swing days. All right, we know the past ones, we know the future one. Okay, so this week's coming up later on. It's going to be Wednesday, right, for the benefit of this exercise. So what I want to do is, if the market made us trade day and it was down here, it closed the zone and pushed up, going to the upside is not a bad idea. So where do I want to do that? Well, I want to do that at a good price. What is a good price? A good price is where the market took off, came back at the right time. What's the right time? It's a trading hour. All right, so if I got the trading hours, as you know, I post all of the trading hours in advance for the full month. Okay, and that's already posted. So here we are, the trading hours. You can see the vertical lines, right? And then the market dipped down and then it bought. Once it bought, as you can see, it was like buying heavy. Market pulls back, so I got in and we're going to the upside. Okay, now where are we going into? Now, I can do two things here. I can either technically take profit when a part of my trade is closed. This is where I've got two positions here. Okay, so I've got a stop loss down here. Let's see how much that is. That's $403. Okay, so and the target up here, as you can see, is 1,115. Obviously I can bring it down here and we can definitely cover the trade, and then the second part of the trade can be a free trade and we'll just take profit. But the reason I'm just keeping it up there for the moment is because we know the trading hours coming up ahead. So if I know I've got trading hours happening here ahead of me, right, what I am expecting is then, well, if I had a trading hour here, like I had a trading hour here, right, so the trading hour, the market falls down. This is a trading hour where the market bought before. So I'm thinking, okay, so then we could probably go into there. Right, so knowing the next trading hour is like, okay, so we could be like chucking a UE into that zone. Knowing that in advance and knowing the future swing day ahead, I can then have a bias. I can say, well, not just for the direction, but also for the time as well. So I can say to myself, if this hour is correct, then we should be pushy, okay, and then we should get to the next trading hour, and then the next trading hour I can take a profit or close the trade depending on risk return and so on. Now, if my bias is to the upside, what I can do obviously here, all right, is I want to keep the position open. If it keeps pushing to the upside, you can see that's the second take profit all the way up there. This is the first one there. Okay, but like I said, that first one is flexible because I want to match it to time and price. All right, I hope that makes sense, right? So now I don't really have to get out of the trade simply because I've covered the stop loss and want to take partial profit, I can say to myself, you know what, I'm going to let this go until the next hour. And if the next trading hour we muck around here, let's say we're mucking around here, then I will definitely close the trade. If we're up here, then I'll also definitely close the trade, but it'll be with a higher profit margin, right? So by using time and knowing the trade hours ahead, I'm thinking to myself, okay, so then I can take more profit on this trade and I don't have to get out of it just because I've covered the stop loss. All right, so we'll see how that pans out. And when the market shifts in your direction, okay, you can always also just push the stop to the, just push stops slightly higher and just follow through. So then we can just push these up to the upside. All right, and that way you're not, risking too much and you're always on top of the trade. So the beauty about knowing time and price, then you can just really follow it through. This green rectangle, as you know, is the first zone that I've marked in, but it should stop sweep, right? We should stop sweep and get into this zone here, I think. If I just move this a little bit there, it should be somewhere around there. Okay, so we should tap into that zone, and this was a trade hour, so I'll leave that there. Okay, and then we'll see how things pan out. So time and managing your trade according to time and price is really going to increase your effectiveness, efficiency, and profitability. I hope that helps as a case study. This is, like I said, I try to do these as often as I can for the benefit of the people in the members area. Have a good trading day and a good week.